We're going to start us in China, where figures have shown the economy continues to cool down.
Yeah, this is data for the last 3 months of 2013, showing that the world's second largest economy grew by 7.7%, down from the previous 3 months. That means that for the full year of 2013, China's economy grew by that figure of 7.7%. Now, that's the same figure that it managed to register in 2012, which was the lowest since 1999. So really a sign that that mini stimulus program we saw the Chinese government undertaking last year didn't work and has managed to just stabilise the Chinese economy. Now it's forecast that the Chinese economy will actually grow by even less this year, by 7.4%. Earlier we spoke to our correspondent Shannon Van Sant in Beijing for an explanation of these figures.
There are a lot of factors behind these figures. The working age population here in China declined by more than 2 million people last year. So China is already starting to feel the demographic change of its huge aging population here, which of course takes away from the number of people that can work in the workforce in any industry, including manufacturing. China is also trying to shift from manufacturing to the services industry. It's doing that through a number of different measures, including allowing its currency to evaluate more quickly than it did in the past. This is having an impact on the economy. China is also clamping down on credit in many ways. They're trying to cool down various local economies here, including the real estate market. That's having an impact on the economy. And also declining demand from overseas. Demand from Europe and the United States still remains weaker than it was a few years ago.
Now, although those figures did beat some expectations, it didn't impress things on the Asian markets too much. The Shanghai Composite and the Hang Seng both in the red, as you can see there. The Hang Seng down by almost 0.4%. Just the Kospi and Seoul in the green on the Asian markets, as you can see, up 0.5% there. Expected to be a fairly quiet day's trading today because Wall Street is closed because of Martin Luther King Day. But here in Europe, it's been a negative open across the board this Monday. The shares in Europe opening all in the red after the gains we saw, big gains in fact, on London's FTSE 100 on Friday on the back of good retail sales. It's now opened in the red by 0.1%. So you can see shares in the British clothing retailer Mothercare are up over 6% though after reports over the weekend that Tesco is considering a takeover of the brands. That'll be one share to watch later on.
Meanwhile, here in France, it seems more likely that there'll be a Chinese investment in the carmaker Peugeot-Citroën.
Yeah, PSA, as the company is also known, has been struggling in recent times. New figures out today showing that their sales were down 4.9% last year, mainly due to the weakness of the market here in Europe. But yesterday, the company's supervisory board met in Paris to discuss options to raise some 3 billion euros worth of capital the company's needs. According to reports in the French media, they've decided to explore an option which will see the Chinese carmaker Dongfeng invest in the company. Now, that also means, though, that the French government will take a stake of around 14%, an equivalent size. That's because the French government has pledged to keep the company in French-owned hands. Delano de Souza has more.
It was here that the Peugeot-Citroën Supervisory Board met on Sunday night. They approved the outline of a possible capital increase of 3 billion euros. Europe's second largest car maker has been struggling. The group's 2013 sales in France declined 7.7%. At the meeting, it was decided that Peugeot's partner in China, Dongfeng, could pick up a 14% stake in the company, along with the French state.
If the question is if you are following this, are you paying attention, have you gone to China and spoken to the Chinese government? To all these questions, I respond yes. And if you're asking an ultimate question, will PSA stay French? My answer is PSA will stay French.
Dongfeng and the French state would be allowed to invest around 750 million euros each in the company shares. The remaining money would be raised from other investors. The proposal has been defended by Peugeot's chief executive Philippe Varin. However, certain unions aren't pleased.
Regarding the Chinese investment, or investors of any other nationality, whether they're French, American or Chinese, we're convinced at the union that employees will have to defend the company because there will be new attacks on their jobs.
Certain members of the Peugeot family, notably Thierry Peugeot, are not keen on relying on Dongfeng or the French state. He'd prefer to raise the entire amount from the markets. Peugeot has been selling more cars in China than in France. The company aims to become number one in the Chinese market in the next few years.
Now, PSA says shares are already reacting to that news, down around 5% a few minutes ago here in Paris. Let's move on now with a look at some of the day's other business stories. And shares in Nintendo have plummeted by up to 18% after the gaming giant said it expected to lose some $240 million this year. The warning came after the Japanese markets closed on Friday. Nintendo said it expected to slip back into the red after disappointing sales of its Wii U games console. The shares recovered somewhat before the close, down about 6%. Deutsche Bank has announced a pre-tax loss of €1.2 billion for the last 3 months of 2013. That's after the bank was hit by the cost of recent lawsuits and falling revenues. The German lender says it will post a net profit for the full year of over €1 billion nonetheless. Shares opened down over 4% in Germany this morning. And the computer chip maker Intel is to cut more than 5,000 jobs in an effort to boost its earnings. Last week, the company reported falling profits for the second year in a row. The cuts represent around 5% of Intel's global workforce.
And finally, Stephen, break it to us. Are the French becoming more risk averse?
It would seem so. Perhaps the economic crisis is lasting a little bit too long here in France. For the first time in 10 years, spending on gambling here in France fell last year. The French spent about €31.7 billion in 2013 on the various gambling options open to them, down around 800 million on the previous year. The biggest fall was in spending in France's casinos, down over 4%, while spending on the National Lottery, which totals around €87 million a day, fell by about 3%. But it had hit a record high in 2012, so perhaps people were optimistic and were trying to win big on the lotto, but have decided now perhaps it wasn't worthwhile after all.
Stephen Carroll, thank you very much for bringing us today's business news here on France 24. And Nicholas Rushworth is here.